Welcome to The Explainer. Today, we're digging into a big question that's got investors pretty puzzled. It really seems like Bitcoin is playing by a new set of rules. And honestly, the old playbooks might be totally out the window. Okay, let's get into it.
So, the last quarter of the year is usually a great time for crypto. But this year, something just feels off. Even with some good news in the wider economy, Bitcoin's price has been weirdly flat, kind of weak even. And it's got everyone scratching their heads and asking, what's going on?
And this slide really puts things into perspective. It's not just that Bitcoin is lagging a bit. It's being absolutely crushed by gold, an asset people love to compare it to. And even more telling, it's falling behind big stock indexes like the NASDAQ. That's not normal. So what is really going on here?
So here's the plan. We're going to break this all down into 4 key questions to really get to the bottom of this mystery and figure out what forces are at play.
First up, let's tackle the biggest idea in all of crypto, that 4-year cycle. For years, man, it was like clockwork. You could almost set your watch to the rhythm of its boom and bust. But the latest data is starting to sing a whole new tune.
You know, this cycle was basically the roadmap for so many investors. It was all built around this event called the halving, which cuts the supply of new Bitcoin in half. It defined the seasons of the market. But all the evidence now is suggesting that map might be, well, pretty seriously outdated.
And this slide right here, it says it all. In the early days, Bitcoin's volatility was just insane, over 140% a year. Today, that's dropped all the way down to around 50%. Those wild, stomach-turning price swings are finally starting to chill out, which tells you the asset is growing up. It's maturing.
And you can see it plain as day on this chart. Those explosive moonshot returns from past cycles, they just didn't happen this time around. Now, don't get me wrong, the growth is still solid, but it's way more subdued, more sustainable. It's missing that classic, crazy parabolic peak.
And this leads us to a really crucial point from some research by Diamond Partners. Because the returns weren't so crazy and the volatility was way down, none of the classic red flags of a speculative bubble ever went off. This wasn't your typical boom and bust. It was something entirely different, and that suggests the whole market structure has changed.
Now, this break from the old rules, it isn't just a crypto thing. Not at all. We're seeing a really similar, kind of weird disconnect over in the stock market, especially with your everyday retail investors.
I mean, just look at this disconnect. For years, it was simple. If people felt good about the economy, they bought stocks. If they felt bad, they sold. But now, the lines have completely gone their separate ways. People's confidence in the economy is tanking, but they're actually buying more stocks.
Yeah, this completely flies in the face of everything we thought we knew. It's a bold strategy, and as some analysts at Bloomberg point out, maybe even a little reckless. It's just another old market rule that seems to be breaking right in front of us.
Okay, so if the old playbooks are pretty much useless, what's really behind Bitcoin's recent slump? Well, the popular story you hear everywhere blames the original crypto millionaires, the whales, for finally cashing out. But the data tells a very different story.
The myth, the story you see on social media, is that all the early adopters are dumping their bags. But when you actually dig into the research, the reality is, well, it's a lot less dramatic and a lot more practical. It pretty much comes down to taxes.
And don't just take my word for it. We've got a quote here from a top analyst over at Fidelity. This isn't some panic sell-off from the old guard. It's just smart, strategic financial planning. Investors are doing something called tax loss harvesting, where they sell some assets at a loss to lower the taxes they owe on their wins. It's just a savvy financial move to make before the year ends.
All right, let's zoom out and put all the pieces of this puzzle together. We've got historical cycles that are changing, investor behavior that makes no sense, and the reasons for price moves are way more complicated than they used to be. So, what does it all mean? What's the big picture?
At the end of the day, what we're seeing is Bitcoin growing up. It's entering what you could call a new normal. And that means a few things. First, those brutal crypto winters with those 50 to 60% crashes, they're probably a thing of the past. Instead, we should expect more stability and less volatility. Now, that also means returns are going to be more subdued. Still good, potentially, but not those crazy exponential gains. And finally, the things that move the market are just more complex now, involving stuff like tax policy, not just pure hype.
Which, of course, leaves us with the million-dollar question. In a market where all the old rules are broken, how are investors supposed to find their new edge? The game has definitely changed.
If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.